Welcome, my name is Ciaran for Moneyweb. We're going to be talking crypto arbitrage. Crypto prices may be crashing, but crypto arbitrage has become something of a safe haven in these unsettling times. Arbitrage involves buying cryptos on one exchange and selling them on another for a higher price. Now, that arbitrage spread or gap that waxes and wanes and at times has been as high as 8%. Those of you who've been in this market for a while will remember those days with fondness. But that gap can also disappear altogether to the point where it's cheaper to buy cryptos in South Africa than it is abroad. These are the exceptions. More usually, the arbitrage spread will range between 1 and 3%. That's nothing to scoff at, since it can and has compounded to a 12-month gain in excess of 100%. At this point, we enter a disclaimer. Historical returns are no indication of future returns. It's been said that crypto arbitrage is the ideal gateway to the broader universe of cryptos, since it aims to remove the trader as much as possible from the kind of volatility that we've seen in recent months. So I want to welcome you all to this special Moneyweb Live Session, where we will separate fact from fiction regarding crypto arbitrage and discuss whether it has any place in an alternative investment strategy. Let me introduce my guests. Joining me are Future Forex CEO and co-founder Harry Scherzer, Dooya co-founder Kyle Dowie down in Durban, and Currency Hub co-founder Andrew Ludwig. Andrew and Harry are in Cape Town. Kyle is in Durban. Welcome to all three of you. Let's start off with the mechanics of crypto arbitrage. Harry, maybe just briefly explain how this works for people who are unfamiliar with this concept.
Yeah, Ciaran, before I start, I do want to say thanks very much for having us on and for putting this together. I think this is invaluable in teaching the South African public about an investment opportunity that's been largely overlooked, in my view. So, in effect, crypto arbitrage is actually quite a simple concept. It bases itself off the fact that the price of cryptocurrencies like Bitcoin trade at a slight premium in South Africa compared to abroad. So quite simply, what companies like ours do is we send rands to dollars for clients. We buy cryptocurrencies with dollars. We send those cryptocurrencies to South Africa, and we immediately sell those cryptocurrencies in South Africa at a profit. And because of the cyclical nature, we can do this repeatedly over and over again with the same rands, which is where the really returns start making their way into the market.
Okay, we're going to come back to that and what rands exactly we're using, because there are foreign currency allowances that make this possible. But before we get there, Andrew, I want to go to you. And I want you to answer this question. Is crypto arbitrage a safe way for people to participate in the broader crypto market? And what kind of people should be looking at it, and who should avoid it?
Yeah, absolutely, Ciaran. I mean, crypto arbitrage is the easiest, safest way to earn returns off cryptocurrency. But essentially, you need to be focusing on a pure arbitrage type of strategy that essentially never incurs a loss. Otherwise, it simply wouldn't be arbitrage. So in terms of the participants in this trade, anyone with the South African ID, up-to-date e-filing, and savings of around 250,000. And that's kind of like entry level there. A lot of the trades are enabled through an interspousal loan that simply doubles the household's income and the arbitrage income to around 200K plus in the trading cycle. But please be very cautious of other loans that are being offered out there. In my view, essentially many of our clients, I say it's a no-brainer. You've got markets that are down 70% in crypto, 20% in equities year to date. So if you've got 200K in your bond or your call account, you can put that into use and really generate some really healthy returns from it.
Okay, Kyle, I'm coming to you. Is it possible to make losses in crypto arbitrage?
So yes, it is possible, but if it's done correctly, then it should never be possible to make a loss. So to elaborate on that, if the market risks are hedged correctly, then you should never make a loss. But if they aren't hedged correctly, then you would have different exposures where it is possible. But that would typically only be where either individuals are performing arbitrage transactions themselves, or where your crypto arbitrage service provider doesn't offer a fully hedged arbitrage service. So just to explain what I mean by fully hedged solution, as Harry was explaining, there's different legs to the actual arbitrage transaction: rands, dollars, and crypto itself. So if you hold pools of each of those, you can essentially perform all different legs of the transactions at exactly the same time, which essentially eliminates all of those risks. And that's what we mean by a fully hedged solution. And in a fully hedged solution, it should be impossible to actually make a loss on a crypto arbitrage transaction.
And if I understand you correctly, I think all three of you offer fully hedged solutions, right?
Correct, yes.
Good. Okay, I want to ask the same question I just asked about making losses in crypto arbitrage. Harry, is it possible to make losses in crypto arbitrage? Have you made any losses for your clients?
Ciaran, we haven't made any losses for our clients because, as Kyle mentioned, like the other two companies, we are also fully hedged. We hedge both the cryptocurrency risk and the Forex risk. So typically, like I mentioned, you have to send the money abroad. The dollar might go in the wrong direction. You then have to buy cryptocurrency. The crypto might go in the wrong direction. But because all three of our companies have actually hedged this risk entirely by having pools in various places, we're able to ensure that clients don't make any market risk. Now, I do want to caveat this to say that the idea of making a loss in crypto arbitrage, while it's extremely, extremely low risk, much like any investment in the market, it's not a zero risk because there are still counterparties that all of us use. We're all using counterparties. We've all done our due diligence and ensured that those counterparties are as strong as possible. But there is a very outside chance that, for example, our bank doesn't send the money when they should have, and then we might be exposed to currency fluctuations. Now, in Future Forex's case, and I'm sure it's similar in the other companies' cases, this has never been an issue. We've never had a single trade whereby a counterparty doesn't fulfill their obligations. So when I say it's a very minor risk, it really is a very, very minor risk. And this is pretty much the lowest risk investment in the market because the market risks are completely hedged out.
Harry, walk us through the onboarding process. I think this is something that people need to understand because, as I understand it, you do pretty much what a bank would do in terms of KYC, which is know your customer, and anti-money laundering. Just walk us through very briefly what that process is.
Yeah, absolutely, Ciaran. So effectively, the onboarding process is to open a bank account with whichever bank is used. In our case, it's Mercantile Bank, which is Capitec's business division. We open that for clients. We do a KYC to ensure that the money is their own or their spouse's, because as Andrew alluded to earlier, any other loan is sort of a gray area in arbitrage. So in Future Forex's case, we purely allow it to be your own money or your spouse's money. And we do that check. The bank does that check again. And effectively, it's as simple as that. It's getting mandates signed and getting a bank account opened, and you're ready to go.
Kyle, is it the same with you, the same onboarding process?
Correct, 100%, as you say. Some forms to fill out, some information we require. And in terms of normal FICA requirements. And then, once you're all set up and onboarded, ready to trade.
Let's go on to a question that a lot of people are asking is this legal? And Harry, we've had you on before and you did explain this. Can you just explain the legalities of this?
Yeah, Ciaran, I'm really glad you asked this question because we always get to a point where people say, look, the returns sound great. I understand that it's hedged. I understand that there's low risks. And the last sort of screw to turn before they put their money in is, I just want to check the legality here. I'm not breaking any laws. SARS aren't going to put me on a red list. And the short answer is yes, it's 100% legal. And just expanding on that, there are two cases whereby we've sort of proved that it's legal. One with the South African Reserve Bank and the other with the South African Revenue Services. So I'll start with the South African Reserve Bank route. On the Reserve Bank's website, you can go have a look right now. There's a frequently asked question about utilizing or buying cryptocurrency abroad, which is effectively what arbitrage does. And it says you may do so using your SDA and FIA, which is that 11 million rand that you were talking about up front, Ciaran. So it quite clearly stipulates that using those allowances, this is fully allowed. And as a second check, in the case of SARS, when applying for FIAs, which is that 10 million Rand allowance, which, by the way, Future Forex does as a complimentary service free of charge using our in-house tax practitioner or in-house tax team and partner tax practitioner, we always write crypto arbitrage when it says reason for investment. So we're very straight up with SARS as well, and they always approve those applications. So effectively, both SARS and SARB have shown us that they're comfortable with the situation. And why wouldn't they be? I mean, all our clients pay tax. We pay corporate tax. They're effectively making money off this process. So, of course, they're happy with it, and it is fully legal.
Andrew, you're back. Good to have you.
Sorry.
So what we went over there was the onboarding process, and maybe just take us through very quickly your onboarding process. While you're at that, just also to follow on from Harry's earlier point about the risks of crypto arbitrage, if you could.
Yeah, so I think in this day and age, everything's digital, and I would expect Dooya and Future Forex to have a very similar online onboarding exercise. We do your KYC, know your client. We do your FICA process. It's all digitized. You essentially get a portion to a specialized person internally, your account manager. Then in turn, you get attached to a specialized tax practitioner who manages the FIA, and everything's done in-house. That is the beauty around what we do, and probably the rest of the guys. I'm sorry I missed the earlier part of the call. We're talking about the risks. I mean, primarily the big risk is having the swings and the volatility. That is the currency swinging 2 to 6% when the premium's only at 2%. So if you're not hedged, if you don't have your FX in-house, if you don't have the CAT2 asset management license, that also is it's a significant part and a significant tool in our strategy to manage those risks. To Harry's earlier point, counterparty risk. We are regulated, FSCA, SARB approved. We come from a hedge fund background, so with the institutional expectations that we have grown up and having to meet, we have done the due diligences throughout the supply chain.
Right, I think that's quite interesting that there are some regulations that you do fall under, even though cryptos themselves are unregulated, and that in time will change. There's even news out this week from the South African Reserve Bank that they want to make this into an asset class, a recognized asset class. But the fact that you have you're licensed for Forex remittances, is that what your license allows you to do, Andrew?
So we're a Forex intermediary. That's different to remittance. I stand under correction, but Harry essentially outsources the Forex component to a third-party Forex intermediary. We are that intermediary. We're also the CAT2 financial discretionary asset manager. Those tools essentially allow us to simultaneously book your Forex at the same time we book your arbitrage premium with the credit lines and institutional relationships we have. That is unique to Currency Hub, and that results in zero losses. So nearly 6 years later, 25,000 plus trades, pure arbitrage, zero losses because of the tools and those regulatory components.
Kyle, you want to jump in here? There's a question come in here from somebody listening in. We may have covered this a little bit earlier, but just go through this maybe a little bit in more detail. Can you explain the arbitraging process, how it actually works? How is it that you can buy and sell simultaneously when an individual can't do the same? Well, an individual actually can, but Kyle, just go ahead and explain that.
Sure. So a couple of components to that. So as has been mentioned before, to buy and sell simultaneously, you essentially need to have pools of the different assets involved yourself, so that you can at exactly the same time you can buy one and you can sell the other one in a different place and essentially lock in your arbitrage. So taking a typical arbitrage transaction, you would have rands, which is where obviously the clients come in with their own funds. You have an offshore currency, so usually dollars, and then you have the actual crypto itself, so Bitcoin, for example. So if you have pools of all three of those assets, so you have rands, you have dollars, you also have crypto, essentially when the price is right, and so what I mean by that, when the arbitrage premium is suitable or as high as possible, you can essentially convert, you can perform all three of those transactions at exactly the same time. So you can take your rands, you can book your Forex deal, so convert to dollars at exactly the same time, because you already have dollars sitting offshore. So which all three of us, I think, have our own pools of offshore funds. You can take your dollars and convert those into crypto. And then you have a third pool, so the crypto itself, which you then take and convert into rand. So you've gone full circle, rand to dollars, dollars to crypto, and crypto back to rands at essentially exactly the same time. You can also obviously build software solutions and technology to assist you to be able to do that more efficiently. And so that's what we mean by essentially buying and selling at exactly the same time. And as you say, individuals can do that themselves, but probably most individuals don't have the resources or the know-how to be able to have all three of those pools, so rands, dollars, and crypto, available to trade at exactly the same time.
Yeah. Okay. That's somebody myself. Who've done this. My DIY arbitrage. Is it possible to make losses? Yes, it is. It is absolutely possible to make losses, because the crypto price, as Andrew mentioned just a moment ago, can move 6% in a day or 10% in a day sometimes. The Forex rate can move. So, you are exposed to those two moving parts. So the fact that you can hedge this out and that you have your Forex sitting on both sides, both in South Africa and abroad, and crypto sitting on both sides of the trade, makes it possible to arbitrage. Okay, Harry, I want to come to you. Does crypto arbitrage have a place in an alternative investment strategy? And I think at this point, Jonathan, if you could just bring up that graph, please. It might just focus people's eye. There we go. Harry, does this have a role in an alternative investment strategy? Explain why.
Yeah, Ciaran. So in my view, this it has, not only does it have a role in an alternative investment strategy, it's, in my view, a bit of a must in an alternative investment strategy, because it allows you to provide a kicker in your portfolio. Now, you'll see by the shape of the graph that crypto arbitrage returns are well in excess of any other return. We've got the S&P 500 here. We've got the JSE. We've got the Bitcoin price directly, that yellow line that goes up and down like a worm. But you'll see that future Forex's returns, and I'm sure the other guys will have relatively similar returns, you'll see that it's a straight line upwards. And the reason for that is because it's an arbitrage. It's not really an investment as much as taking advantage of a market inefficiency over and over and over again. And what this is showing, that graph, is if you had put 200,000 Rand into each of the indices or into crypto arbitrage and traded once a week with crypto arbitrage, you can see how the returns, it really is chalk and cheese. It's not even close. Now, I do need to caveat this by saying this doesn't mean you should throw all your money into crypto arbitrage. And the reason for that is these upper limits. So basically, like we discussed earlier, each South African only gets to send a cumulative 11 million Rand offshore, which means that if you invest, let's say, 200,000 Rand, you can only do 55 cycles, and then you'll deplete your million Rand allowance for the year. On 1 January each year, it will refresh. But if you're not using your full 11 million Rand, as 99.99999% of South Africans aren't, it doesn't really make sense not to monetize it using a mechanism like crypto arbitrage.
Okay, I think at this point, Andrew, maybe we need to explain where this 11 million Rand comes from. Could you do that, please?
Yeah, so you've got two components. Single discretionary allowance, that is the 1 million Rand allowance. That's the easy part to this campaign as such. And then you've got your 10 million Rand foreign investment allowance that is available to most South Africans. The challenge then is kind of proving your local net worth in order to motivate to SARS that you can continue to expand into this arbitrage cycle, which you can with time. That's an entirely different conversation and detail into FIA and application, which essentially we all take care of.
Okay, so the special discretionary allowance, that's 1 million Rand a year. You don't need any permissions for that. It's the same allowance you use when you travel overseas and you spend on your credit card. But the foreign investment allowance, that's 10 million Rand a year. That can be an administrative hurdle, and you've got to get, you did mention earlier, you've got to be compliant. You've got to get SARS sign off on it. Do you assist clients with this, Andrew?
Yes, absolutely. Ciaran, this is our bread and butter. I mean, this is 90% of the client's profits and the trading. And, for 6 years, we have just done absolutely everything we possibly can to optimize this process. This is the pain point. It's a laborious exercise. I warn everyone up front about that when we do chat. But with the right guidance and the right professionals in place, we have several specialist tax practitioners essentially brought in-house, and with them and their resource and their skills, they are there to generate multiple tax clearance certificates over the course of the year, generally tapping into various different people. We have some guys like Rockefeller who arrive with 10 million rand tax clearance in one ticket and R1 million trading, and then you got the other fella, and they're working with 200,000 rand. And with time, we can definitely dig into that allowance.
Okay. Just for people who are listening in, you can send your questions in the YouTube and LinkedIn chat boxes if you're listening to this live stream, or you can email events@moneyweb.coza. That's events@moneyweb.coza. All right, we have a couple of questions coming here, so I think we might just jump into some of these. Kyle, how do you manage to always get your FIA applications approved? And maybe just follow on from that, what Andrew is saying. Do you offer assistance to your clients to get this foreign investment allowance, this 10 million rand approved? And the question has another leg to it here. Even though we submit everything SARS requests, they end up rejecting many applications and they take weeks to review any applications. Is that your experience, Kyle?
So firstly, as you say, that is also a service which we offer in-house at no additional cost. In terms of the question, in terms of actually getting them approved, so as it seems like the listener has experienced, unfortunately, with SARS, it's not always clear cut. You can sometimes submit two identical applications. One will get approved, one won't, and unfortunately, there is a bit of the luck of the draw, if I can put it that way, with SARS. But one of the benefits of doing it with in-house and ourselves is that there's no additional admin for the actual client. If it is declined, we will follow up with SARS to ask why. Sometimes there are valid reasons from SARS' side. So, for example, if you aren't tax compliant, you have to be tax compliant in order to get it approved. There will then be the relevant communication with the clients back and forth to obviously get that resolved. But often it's just a case of reapplying, right? Resubmitting, and as I said, you can submit two identical applications to SARS. One will get approved, one won't. And as I said, often it's just about reapplying essentially.
Okay, and Harry, the same question to you. Do you assist your clients with this approval, this foreign investment allowance process?
Yeah, absolutely. We also do this in-house. We've got a partner tax practitioner, an in-house tax team, and really, as Andrew and Kyle were mentioning, this really is our bread and butter. This is what we have to do. We have to make it as efficient as possible. We need to be sure because in crypto arbitrage in particular, time really is money. You've got to get through as much of that 11 million over the year as you can. So the more efficient you can be, the more you can get through. So we've put a lot of time, a lot of effort into basically testing all the various strategies to get FIAs approved and manage to hone in on the one which is the optimal and the most efficient. And so we really do believe that we can make it as quick as possible for clients so that they can get through as much as they can.
Okay, and just a follow-on question from that question which has come in here. What capital do you need to start? And I think you have different thresholds there. I think in some cases it's 100,000, in some cases it's 200 or even 250,000. I know that the returns improve the more that you invest. So, Harry, just pick up on that one, please.
Yeah, sure. So in our case, our minimum investment amount is 100,000 Rand. But that said, we do agree that the more you invest, the better you do. So the reason that we allow a minimum investment amount of 100,000 Rand is, number one, because it's strongly profitable. But number two, because it often allows clients to start and test with a lower sum and then increase their amount over time as they start getting comfortable with the process. So we find very often people give us 100, 200,000 Rand, and by the end of the year, they'll have thrown 500,000 plus at us because they start trusting the process. And I'm exactly the same as an investor. I need to check that something works with a smaller amount and then potentially put more in. So for that reason, we've brought our minimum down, or our minimum is lower at 100,000 Rand, despite the recommendation being 200,000 Rand plus.
Okay, Andrew, another question coming here, and this is from Jacques. He's asking, what are the fees and the Forex charge? That's a good question.
Well, I think that varies. I mean, that would be an explicit question to us in Currency Hub. All our details on the website, currencyhub.co.za. But essentially where we differ is we are the Forex intermediary. We do not charge for the arbitrage. So in a situation now, we're in a low premium environment of circa 1.8% once we've eventually liquidated after the hedging costs. We'll be seeing our clients making at least a 1% profit, assuming they're trading 250K. Now, where did the rest of the money go to? Banks like a little bit of this as well. So your SWIFT transaction fees probably make up around 0.3, 0.4%, and then the remaining amount, circa 0.4%, that is the Forex fee, and that's essentially what we're getting out of the whole trade itself.
Okay, so if there's a gross premium of 1.8%, and just to clarify what that is the difference in the price that you'd be paying for the Bitcoin or the USDC stable coin, if that's what you're arbitraging. Mm-hmm. There would be a gross difference in price of 1.8%. After costs, you'd be making a net of about 1%, correct?
Absolutely, and I think also to reiterate here, we are in a low premium environment. So let's say it goes down to 1.6. Our client will still make 1%. The bank will still make their 0.4, and we'll make slightly less. We do not trade if it's less than 1.5%. Earlier questions I may have missed, but on a previous interview with Harry, the guys are talking about setting minimums, and I think, Harry, you totally answered that correctly. We don't want guys to kind of think, I'm going to set this 4% minimum. The days are gone. I don't think we're going to see a 3+ premium anymore. I think we need to be cognizant of the fact we are operating in a sub-2 type of environment. And if we're making 1%, that's 1% of 10 million Rand. It's 100,000 Rand for 3 to 5 hours work. That's the best deal in town right now.
Very good. Kyle, same question to you. The fees that you charge, what's your take?
Sure. So our model is slightly different. So we just essentially take a percentage of the actual profits. It's somewhere between 20 to 25%, depending on where you are in the actual year. And kind of our reasoning for that is, we only want to make profits if our clients are making profits. So if we do well for our clients, if our clients are doing well of it, obviously our Rand value that we get out of it will be good. But if we aren't making money for our clients, then it's not really reasonable or fair for us to be charging any additional fees for that.
And Harry, same question to you. Your costs, please.
Yeah, similar to Kyle, we also take a percentage of profits. The rationale is exactly the same, such that we want to be aligned with clients. It's something that we've always had in-house, is that as a culture, we want to be as aligned with clients as possible. And clearly the best way to do that is to take a percentage of their profit. So the more that you can make for them, the more that you can make for yourself. And what we do is we try to get the third-party costs as low as possible, so that, as Andrew was mentioning, in a low premium environment, we want to be able to trade whenever a profit is available. And the best way to do that is by taking a percentage of profit, so that when the low premium environment comes in, our profits get decreased proportionally because everyone's making less. When the premiums increase, everyone makes a bit more. So what we're really trying to do, and have managed to do in my view, is get the third-party costs as low as possible to ensure that we can optimize trading and optimize profits off each trade.
Okay, Andrew, a question that has been asked many times about this is, once you have regulations and you get institutions that are, in terms of their mandates, able to participate in this market, is it not going to kill the crypto arbitrage market altogether? Answer that one, please.
Yeah, Ciaran, I think that is the case. I think we're very lucky. I'm frankly blown away that the arbitrage is still here. The fact that it's been hugging that 2% band for 7 months, suggests that there is maybe an institutional player propping this thing up. The regulation that was promised to us through SARB and FSCA in October, November last year has not played out. We're all still submitting suggestions to the regulator to motivate regulation, which all of us agree would be a very welcomed event. But the moment the institutions can purchase this, and there's a slight shift in exchange control, that it doesn't limit it to an individual's trade, we would see the liquidity dry up in a single trade.
Right. But I think also, I mean, we've even seen in the arbitrage market here where it went negative. In other words, it was cheaper to buy Bitcoin in South Africa than it was overseas. It doesn't happen for long. It can, be an hour, it can be a few minutes, but it does happen. And even though the arbitrage spread does disappear for a period of time, it always, for some event or another, will reappear. So, you might have it flat for a month. Unlikely, but it can happen. Then all of a sudden it just resurfaces. So I kind of figure that this won't entirely disappear in the foreseeable future. What do you think, Andrew?
Hopefully not. And I think Harry's described this in a previous interview as well. But I think let's just look at the last 2 weeks. We've had it's been a mess at a macro level. We've had dollar increasing in its value, money pouring out of emerging markets. We lost 6% in the rand when load shedding went to 6%, and we got Bitcoin at a suppressed value of like at $20,000. It's not great. So the premium hasn't been good, and our trading environment has been challenged in the last few weeks. But we do believe we'll come through out of this as soon as we start to see some normalizations in this regard. And we're chatting, the trading starting to come back online, but it's volatile. If you're doing this on your own, you're not using a third party like Future Forex, Dooya, or Currency Hub, you are going to get carried out. That's a given. So I highly encourage outsourcing this to professionals who are hedged, who can trade on a daily basis, sometimes up to 3 times a day like we can. And that is how you get through your arbitrage risk-free.
All right, Kyle, as a follow-on from that, as somebody who has done DIY arbitrage, maybe just explain the advantages of going with a crypto arb provider. I kind of debated this myself and thought, well, I'm handing over fees to a professional, but I can actually see that there's a benefit to that, particularly because I can't hedge these trades. So maybe just run through the main advantages of using a professional like yourself.
Sure. So as you say, a main reason I think would definitely be around the hedging ability. For most individuals doing it themselves, that's simply not possible. Whereas using a professional third-party service provider, you can eliminate that risk, which for most investors would definitely be a huge plus. The next thing for me would be that simply it's far less onerous. After you've onboarded, after you've signed up, you've opened the necessary accounts and etc. You can essentially be as hands off as you want, right? We manage everything for you. The booking of the trades, the FIA applications. So essentially, you never have to, if you don't want to, you never have to do another thing, right? That's it. Whereas if you're doing it yourself, you have to do all of that. For every single trade. Plus, you also have to have the time to be able to, to book the trades, to perform each of those different legs of the transaction, the buying and the selling of cryptos. And again, for most people, that's simply not practical. You can't just, leave your job for an hour or two every day and quickly go off to manually perform some crypto transactions. So that's definitely a huge side of it. To that, I would also add security and so what I mean by that is, in crypto itself, obviously, security is a huge thing, a huge concern. And again, handing that over to professionals where, you aren't the one responsible for making sure that your crypto accounts and your different exchange accounts are correctly authenticated and secured is a huge plus. And again, as was mentioned earlier, the due diligence that each of us have done in terms of the counterparties that we use and the service providers that we use, that's our area of expertise. We've spent hours and hours researching and making sure that the service providers that we use aren't just going to run away with our money, or with our clients' money. And so again, for individuals to do that themselves, is either a huge amount of time, or they may not simply have the knowledge or the expertise to actually do that. And lastly, again, as has been mentioned, there's some other value adds that each of us offer. For example, the FIA applications in-house, free, and as Andrew was mentioning, that can be an extremely onerous exercise if you have to do it yourselves. As one of the listeners asked earlier, SARS can just decline an application for no reason, right? And if you have to keep doing that, it can become extremely frustrating if you have to keep doing that.
Right, and I think the other benefit of it as well is you can see on a daily basis the results of the trade, right? So the trade is closed out at the end of the day, so it's a very transparent thing. There's no waiting till the end of the quarter to see how you're doing. So I think that's something fascinating and addictive about crypto arbitrage as well. Harry, jump in.
Do you mind if I just jump? Yeah, I'm going to jump in quickly and say that I echo everything both Andrew and Kyle has said. And I think another point which is a really, really big one in this is the economies of scale. Because we do this for multiple clients as companies, we get better rates than individuals often can. And as a result, along with all these additional value adds, I've found that our returns as companies exceed that of individuals because of the tight margins, and therefore any incremental decrease in a third-party cost can vastly improve the returns. So really, despite us taking a proportion of profits or a Forex fee in Andrew's case, all three of us are probably charging less than you would be charged by the banks otherwise, because we've got these economies of scale, because we're able to act on the spike as and when they come up without needing to you personally to monitor it. So actually, I think your returns will increase along with saving you time.
Okay.
Yeah, spot on, Harry. I mean, that's exactly it. We, all three of our firms are dedicated. We're glued to the screens, looking for that trading opportunity, optimizing the supply chain, squeezing the supply chain for better rates with the economies of scale. And what you think you're saving and doing it yourself, we've already made those savings for you. And don't underestimate your hourly worth.
Okay, 1 minute each, please. Your final closing comments. Let's start with you, Harry.
Yeah, Ciaran, firstly, thanks for doing this. I really hope that people gain more credibility in the process. And the one thing I want to say is do your own research once you've justified that the arbitrage works and is something you'd like to get involved in. All three of our companies are really strong. So please do your own research, see which one feels right to you, and go from there.
Okay, and here's your opportunity to plug your company. If people want to find out about Future Forex, where do they go?
They go to futureforex.co.za. There's a get in touch button where one of our business development people will get in touch with you. You can go straight to register if you've heard enough when you want to
Andrew,
register.
Sorry for cutting you there. Right. Andrew, your closing comments, please. And also where people can reach Currency Hub.
Yeah, so you can find us at currencyhub.coza, detail and all the information's there, and we'd be delighted to assist you there. But yeah, I mean, in summary, this is, to me, it's a no-brainer. I mean, you could take 200,000 Rand out of your bond or your call account. It's earning, 7% maybe? Take a negligible hit of 4% for 3 to 6 months, put that money towards an arbitrage strategy, make 100,000 Rand. Lend the money to your wife, make 200,000 Rand. 100,000 Rand return in 6 months. It's almost risk-free, the risk being counterparties. And with all three of us here on this meeting today, Future Forex, Dooya, ourselves, Currency Hub, we're here to support you. We meet everyone else's different types of needs and expectations.
Right, and I think on the counterparty side, it was a question that came in, which I didn't get to, but I presume that you've all done extensive due diligence on the counterparties that you're using in this whole process. And one of the aspects that you'd be looking at is the soundness, the financial soundness of these companies, right, Andrew?
Yeah, absolutely. So, I mean, as the individual companies, we are regulated by the Reserve Bank and the FSCA, so we're fully accountable. We don't have to be for crypto, but we are, and that's the mindset we've gone there. In terms of the supply chain, let's use an example. UST depegging, the Terra scenario, it's a bloodbath. We halted trading for a period of time, and we did a deep dive throughout our supply chain to check if there's any contagion risk in that regard. Our preference to the stable coins, USDC to USD, is where we feel comfortable in this particular trade. And the supply chain that includes the likes of Mercantile, Investec, OTC, FX, crypto exchanges and the likes, we have worked with them for a very long time and are comfortable in the trade.
That's a good point that Andrew brings up there, and I just want to very quickly touch on this with you, Kyle and Harry. Did you do any due diligence on your third-party providers to see if there was any contagion or risk as a result of the collapse of Terra USD? and other collapses that we've read about. Kyle, maybe you start.
Yeah, 100%. As you say, I think that caused some big shockwaves throughout the whole crypto industry. A couple of big international firms as well got themselves into a spot of bother. And from our side, as you say, we on an ongoing basis are always evaluating our counterparties, our service providers, who we use. Are we comfortable? We've reached out to certain companies just for clarification around some things, and it definitely was a reason to just pause and to make sure that we are comfortable with who we use, and happy to report that we are 100% happy and comfortable that the service providers and counterparties that we use have been due diligence, if I can put it that way.
Good. Harry?
Yeah, no, exactly the same. I mean, we use Bitcoin and USDC. Those are our two coins that we use, and we target the better spread between the two at any given time. So with USDC, we've actually met the executive team of Circle, who are the issuers of USDC, where we asked them all the grueling questions before actually using them, because it was very important to us. I mean, I spoke to the CEO for a while and said to him, look, we're going to be doing loads of volumes through you. Let's make sure that these reserves are as they say they are. We've confirmed that they're audited monthly and that everything is completely safe. And I think it's well renowned and well regarded at this point that Circle are USDC, I should say, is the safest stable coin in the market right now. So that was our reason for using that. That's why we would have never used UST. And luckily, or not luckily, I guess due to our due diligence, all three of our companies avoided any collapse or anything like that because we had done this due diligence. It just shows how important it is.
Good. Kyle, I didn't give you an opportunity for your final closing comments and how people can reach you. Please go ahead.
Sure. So you can find us at dooya.co.za. So that's Dooya, Dooya. Just to thank you again, Ciaran, for hosting all of us. It's been great, and hopefully all the listeners have gained an insight into the advantages of crypto arbitrage. And just to echo, what Andrew was saying, why wouldn't you want to get involved in it? If you've got money in your bond or anywhere else that is earning single-digit returns for the year, even at the moment with the rates in the market not being where they have been, you can easily surpass that.
Okay. I think we're going to leave it there. That was a great discussion, and I think everybody listening in will have a pretty good idea of what they can expect and what's realistic about crypto arbitrage. Because I think for a lot of people who are sitting on the sidelines and don't understand crypto very well, they see prices crashing and they read the headlines. They don't realize that this is a very nuanced area. The universe of cryptos has got many aspects to it. And crypto arbitrage, and thanks, Harry, for showing that graph, it is something that is been fairly consistent, and I think you've all made the case that you can do this and not make losses, and that of course is the key to any successful trading, is first of all protect your capital, but the fact that you're able to generate a good return on this no matter what is happening in the crypto market it should therefore, I think we've all agreed, probably form part of an alternative investment strategy. Not all of your money, but you can certainly give a small percentage to it. So I want to thank you all, Harry Scherzer, Andrew Ludwig, and Kyle Dowie, for coming onto this live webcast and talking to us about your products and your experiences in crypto arbitrage.
Thanks very much, Ciaran. It's great to be here.
Thank you, gents. Thank you, Ciaran.